Hello there! In the final part of Lecture Series 2, I'll look at recognition and derecognition of assets and liabilities, Chapter 5 of the Conceptual Framework of Financial Reporting. What is meant by recognition? Recognition is the process of capturing information for inclusion in the financial statements. An item should be recognized, firstly, if it meets the definition of assets, liabilities, equity, income, and expenses as set out in the Conceptual Framework of Financial Reporting. Secondly, it should meet the fundamental qualitative characteristics of useful financial information, that is, relevance and faithful representation. Thus, it is possible an item meets the definition as prescribed in the conceptual framework but may not be recognized. For instance, an item may not be recognized if there is uncertainty over the existence of the element or with low probability of inflow or outflow of economic resources, as it may not provide relevant information. Likewise, if there is a high degree of measurement uncertainty, recognition may not provide a faithful representation. As judgment is required in deciding if recognition of an element is appropriate, this will explain why specific recognition criteria may vary from one accounting standard to another. Now, let's look at what is meant by derecognition. If recognition is the process of inclusion, derecognition would be the process of removal of all or part of an asset or liability in the statement of financial position. An entity should derecognize all or part of an asset if there is loss of control. That is, the entity has transferred substantially all risks and rewards associated with the asset or part of the asset. A liability or part of a liability should be derecognized if the entity no longer has a present obligation. With that, we have come to the end of Lecture Series 2. Here I covered the following main chapters of the Conceptual Framework of Financial Reporting. Chapter 1, Objective for Financial Reporting. Chapter 2, Qualitative Characteristics of Useful Financial Information. Chapter 4, Elements of Financial Statements. And Chapter 5, Recognition and derecognition of assets and liabilities. In future bite-sized corporate reporting lecture series, I'll focus on specific recognition and measurement principles of various accounting standards issued by the IASB, starting with IAS 16, Property, Plant and Equipment. Till my next lecture series, thank you and have a nice day.